Hi guys, welcome back to this Money Control live stream. You're watching Closing Bell with me, Nandita, Khemka, and my colleague.
Hello there, I am Yatin Mota.
Hi, Yatin, of course, new day, but the same story. We've seen the markets remain fairly range bound. We are stuck in a range, not being able to break out of that 24,700 mark. 24,600 to 24,650. That's the kind of range we've been hovering around. But during the day, there was an attempt to clear the 24,700 mark, but we failed to do so. Came very close, 24,691. That was the day's high today. But yes, still we did manage to end in the positive zone near about that 24,650 mark. Broader markets continue to show strength, Yatin. It's been the last several sessions of gains for the broader end of the markets. The Nifty mid and small cap indices gained almost 0.5% or so apiece. The market breadth was also in favor of gainers, although it was fairly distributed, right? 1:1 almost. In terms of sectoral movers, banks were clearly on the back foot today, even PSU banks for that matter. But aside of that, all the other sectors saw mild gains, the likes of FMCG, that was fairly upbeat, 0.4% kind of gains coming in there. Autos and IT also saw some slim gains. IT, of course, extending gains over the last few sessions. In terms of individual movers, then Bajaj Finance, that was among the top Nifty gainers today. Of course, after yesterday's guidance, the stock has been upbeat. Yesterday also, it managed to come off its day's lows. And today as well, extending those gains, 2.5% gains coming in on Bajaj Finance. FMCG names, as I mentioned, doing well. So Trent was the top Nifty performer. Almost a 3% uptick coming in there. Britannia was a close second. Shriram Finance continues to do well. Hero Motocorp, Infosys, BPCL, these were some of the other gainers. On the flip side, some of the banking names were under pressure. SBI being one, Axis Bank also under pressure. Even Reliance Industries was among the laggards today. JSW Steel, that was the top Nifty laggard. Adani Ports, Adani Enterprises among the losers, and so was HDFC Bank. BEL was another laggard in today's session. But Yatin, from the broader end of the market, stock specific action continues, but railway stocks were were kind of doing well today.
Yeah, they were doing well, and I think once again the railways have started giving orders. I think one of the companies, Kernex Micro, they have got an order of nearly 2,200 crores for railway signaling systems, and after a long time, most of these railway tenders are now throwing up orders. So today, Jupiter Wagons as well as Titagar Wagons were buzzing in trade, 8 to 10% gains coming in for all of these stocks. Swan Energy, Jubilant Ingreva and PNC Infra were the other Nifty 500 gainers. When it comes to profit taking, some bit of profit taking in Brigade Enterprises, CCL as well as DMart. And obviously, we'll talk about DMart in detail after Amazon also has launched their quick commerce business, which is Tez. Clearly, the brick and mortar stores getting impacted because of all of these news flows. But stocks like 361, CDSL, Indian Hotels, Eris Life Sciences, Keynes Technologies continue to hit fresh 52-week highs. Stocks flying anywhere between 2 to 5%. So overall, the mid cap index did well, and overall the market breadth also remained better than 1:1. So despite a flattish kind of a Nifty trade, we have the mid caps which are clearly buzzing in trade and outperforming the benchmark indices.
Yeah, last many sessions, in fact, the broader end of the markets have been outperforming the benchmarks. But let's narrow it down to some of the stocks that are on our radar. Yatin, you mentioned DMart. On a day when the FMCG index is up and about, and all the other FMCG names are doing well, DMart is bucking the trend. It's down somewhere around 3% or thereabouts, and there has been some bit of negative news flow. Of course, Goldman Sachs, which has been a long-standing bear on the stock, has trimmed its target price further on the stock from 4,000 rupees to 3,425 rupees per share. It has maintained its sell rating as well. And if you look at the revised target, it implies a 10% downside from yesterday's close price. Mind you, DMart has already corrected 30% from its all-time highs of 5,484 or so. The rationale that Goldman Sachs has given to cut its target price is the fact that it feels that the competitive moat that DMart enjoyed is facing increasing pressure. In fact, the company has been increasing price discounts to maintain its competitive advantage, but it's clearly not working in its favor. And it is also pointed out that DMart does not really have any competitive advantage in the fresh food categories in urban settings, and a large section of India's grocery market, is not addressable by DMart. In fact, addressable market is now only 1/5 of India's $500 billion market, and its growth headroom is now outside of the country's top 10 cities. Aside of that, it has also cut its estimates for FY25, FY26 and FY27, citing rising competitive pressures, headwinds, as well as factoring in lower revenue growth going forward. So looking at the estimates, for FY25, it has the estimate has been cut by over 4%, for FY26 by over 6%, 6.2% to be specific, and for FY27, its estimate has been cut by 6.1%. Now, if you look at some of the other brokerages, Yatin, I want to mention that there are more sell calls on DMart than buy calls on the street now. And recently, even IIFL Securities had highlighted similar concerns. They had stated that DMart is no longer the go-to destination for the most affordable daily groceries. And now, of course, today we also had Vishal Mega Mart, right? So increasing competition, and of course you mentioned that Amazon is also rolling out its own platform. So that way things are not looking great. Of course, we know that DMart has been included in the derivative segment of late, but instead of reviving fortunes, or instead of spurring heightened buying activity, we have only seen selling in the stock. If you compare it with the likes of PB Fintech, they have seen a very good up move post the FNO inclusion, but the same hasn't happened. And even if you look at the second quarter performance, it was far from enthusing. Management has also noted that the metro stores were feeling the pressure from online competition, and increasing investments were also impacting operating margins. So yes, things not looking all that great for DMart, and as I mentioned, there are more sell calls on the stock than buy calls on the street.
Absolutely, and DMart, stocks like Swiggy, Zomato, all of them were in pressure after the news came in that Amazon also starting to do a pilot project to launch its Tez quick commerce services. Probably they'll roll out in other cities quite shortly. But the sector of the day clearly was cement, and the price hikes have come in. Moneycontrol as well as CLSA are of the view that the price hikes which have come in are in the range of 10 to 30 rupees per 50 kg bag, and the highest or the steepest hike has come in especially in the eastern and south Indian markets for the cement players. Also, we have seen the west markets increasing prices by nearly 10 rupees a bag, and also the northern markets are looking buoyant when it comes to demand. Now, CLSA says that this rise in cement prices indicates a 3.5% sequential improvement. However, the price is still down 4% on a year-on-year basis, and they are very hopeful that second half in terms of demand for cement should move up. Remember, we had an elongated monsoon season which impacted infrastructure as well as housing activities, but with monsoons behind us, and second half post the festive season typically has a pickup in construction activity, we could see cement demand also moving higher. In fact, gradual volume recovery in the second half of November is already seen according to CLSA, and in terms of preference of stock ideas, they believe that Ultratech is one stock that needs to be on your radar, especially when they have a outperform rating on the stock. So CLSA there sounding bullish on demand of cement, as well as they are slightly constructive on the stock of Ultratech Cement.
That's true, Yatin. Cement, of course, hogging the limelight today, and the sector, of course, has been in the news because of all the consolidation that's happening. And of course, if there's a price hike, then the sustainability of that price hike is something that will be watched out for going forward. But keeping with the consumption theme, Yatin, quite a few IPOs have opened up today, Vishal Mega Mart being one, and MobiKwik being the other one. But let's talk about Vishal Mega Mart first of all. 8,000 crore rupee IPO, entirely an OFS, price band anywhere between 74 to 78 rupees per share. Of course, it caters more to the affordable segment, and its expansion has been taking place in the tier 2 and tier 3 cities. In fact, the company, I had spoken to management today, and they had said that there was no need for any external funds, and they are well capitalized. It's a zero debt company. They don't really need outside funds for expansion. It has no debt, 700 rupees cash, 700 crore rupee cash on the balance sheet as well. The PE investors, the PE promoters are, kind of trimming their stake a bit, but they have plans to be long-term investors in the company, and they have no such plans to, scale back more as of now. That's what the management said. Of course, the big takeaway was the fact that they have also forayed into quick commerce, Yatin. And the pilot was launched last year, and as of now they are present in 390 cities, and they are only going to expand when it comes to that, because it's a hot space, right? And they also want to get into it because they also have FMCG products as one of their categories. Their apparel business is purely their own brand, and over 70% revenues coming from there. Aside of that, it has seen okay subscription till now. In contrast with MobiKwik, that's a 572 crore rupee IPO.
Correct.
On the first day itself, it has seen solid demand, almost 4 times subscription coming in vis-a-vis the number of shares on offer, and retail demand is pretty solid. I think last time I checked, 8 times demand, or compared to the shares that were on offer. It's a fresh issue of 572 crore rupees. Price band is anywhere between 265 to 279 crore rupees. The IPO size has been reduced not once but twice. They were earlier planning to raise 1900 crore rupees back in 2021, but then they scaled it down to 700, and now they have scaled it down to 572 crores. I asked the management what was the rationale. They've said that the growth in revenues is one reason why they felt that they don't need to raise that much amount of money. Their revenues at the very first time when they were filing for IPO was 300 crores, and in FY24 their revenues had jumped to almost 900 crores, which is 3 times, compared to what they were, making in terms of revenue when they first filed for IPO, which is why they have scaled it down. And the IPO funds will be used for product development, data, machine learning, as well as AI. But yes, very solid demand coming in for MobiKwik, a 570 crore rupee IPO. Totally a fresh issue. So yes, IPO market is hot till once again, and 3 big issues opening today, and more lined up, as we move forward.
Absolutely, I think 5-6 new IPOs are lined up, but yes, we have Nandita, which has highlighted the key ones, MobiKwik as well as Vishal Megamart, one of the big IPOs which has come in, especially after Swiggy. 8,000 crores worth of shares on offer. So with that, Nandita, it's a wrap on this edition of Money Control live stream. We'll see you on the other side tomorrow. Nandita will have a lot of stocks to focus on morning 9 a.m.
Thank you. Thanks a lot for watching.